So ladies and gentlemen, check out what I got today. Before we get into today's video, I got a new bonsai tree of someone very special. So I'm going to pop this on my desk and it's going to sit over here. How's that bonsai tree looking? All good? So let's get into the video. Today we are going to be talking about some of the different sectors in the stock market, what is performing well and what has not been performing so well over the last year. And we're going to be diving into what is the richest economy in the world and where you should be placing your money right now in the stock market so you can get the greatest investments of all time and you can make that passive income for yourself. Let's get into the video. Someone that is interested in making more money, then you have landed yourself on the right page. My channel is all about investing in the stock market, buying in ETFs and index funds and holding them for the long term. I am a long-term investor and I have made mistakes throughout my current lifetime since I started investing, so you can learn on this channel exactly what not to do, learn from my mistakes and grow with me and follow me on this journey through investing together. So if that sounds like a plan to you, then do make sure you stick around, hit that big juicy red subscribe button below and start making that passive income today through compounding interest and dividends. So guys, welcome back to my channel and I do hope you like my big bright colorful t-shirt in support of the LGBT month ahead of us. Let's get into the video. So to understand what is driving the markets, first you must understand what is the most powerful economy in the world, and the most powerful economy in the world is of course the United States of America. Underneath that is China. So why is it important to understand this fundamentally? Well, it's important because if we know where the majority of wealth is coming from in the markets, then that is where we should be placing our money to invest. There's no good just because I'm from the UK investing in the UK stock market when I know the majority of wealth in the world is actually in the United States of America and China. Perhaps those are two of the stock markets that I should be looking at and putting my finger in when I'm investing, because that is where I'm going to hopefully see the greater return if these companies are growing year on year. So as I've said before, we are going to be diving into different sections of the stock market and what sections are really driving the markets today, where you can start to make that passive income and know where to invest. It's always really important to make sure you do your research first so you know exactly what is moving the markets, and if you know what's moving the markets, then you know where to put your money, and that is where you can accumulate growth and wealth long term as an investor, and you will have a passive income for life. So as we know, the stock market is broken down into many different sections. We've got sections such as energy, we've also got finance, we've also got consumer goods, technology. There are so many different segments, and it's really important to understand what those sections are doing and how they are performing and reacting to the current market. So I've backdated the last year and I've looked at a spreadsheet of what has performed the best over the last 12-month period, and as you can see on the screen, we have some quite shocking results. The oil and energy sector is actually down about 37% in total since last year, and that is quite a big factor because if you're investing in those oil stocks, you don't want to be losing any money. But perhaps you're a long-term investor like me and you're someone that sees opportunity when stocks go low to buy in low and sell high. So for me, that is exactly what I have been doing because we are in a global situation and we are in a lockdown still. A lot of the economies around the world are still opening back up, which will mean that we should see a shift in prices such as oil, and they should return to those normal levels within the next 6 months if we do not see a second wave and there is a fear factor within the markets. The question you really have to ask yourself as an investor is, where do you see this section going within the next 5 to 10 years as a long-term investor? Do you see oil prices completely crashing to the ground with fossil fuels and then renewable sources of energy coming in and taking over? And then again, which companies are you going to then decide to invest in if that is the case? But again, it is always down to you doing your own research. There's always two sides to where things could go in a bull or a bear market, but it's up to you to decide what to do when you're doing your research and know what companies you want to invest in safely so that hopefully you can make that passive income long term and compound that money to get that interest and those dividends that you want to see on your account. So this is where it's really important to have done your research, because if you understand fundamentally what moves the market and why these sections are underperforming right now, you can also understand where they're going to go in the foreseeable future. And if you can understand that, that is the power of knowledge and that is the power of investing, because that is where you are going to see a long-term growth on your account. Now, there is a really safe thing that you can do as a long-term investor, and that is to invest in an ETF that covers the indice that you want to invest in. So there is something I want to tell you guys. there is an index called the Spider ETF for certain indices that you want to invest in. It's essentially a breakdown like an index fund which covers the entire index that you're going into. So if you wanted to buy a stock, for example, in the healthcare section, but you didn't want to just purchase one because you were unsure whether that stock is going to go up and down, you can invest in the entire section of the healthcare, and that is called the Spider ETF in healthcare. So let's say I wanted to invest in an oil company such as ExxonMobil in the energy sector, but I thought it was going to be too much of a risk to put all of my money into one company. I could actually find the energy sector's ETF, which is an accumulation of all of the energy companies together, and I can just buy straight into that index, and then I will essentially be holding a diverse portfolio of all of the energy companies. Again, it is going to be made up more in a high percentage of those top companies like BP, Shell and Total, but there will be a breakdown of all of the other hundreds of companies that come under the same index. So that way you are not going to be putting yourself at such a high risk, and this is something that is really great for beginners because we do have a breakdown of a Spider ETF into all of these different indices. So let's say I wanted to invest in the technology sector, but I wasn't sure what company to choose and I was scared to put all of my eggs into one basket. I can actually just choose the technology sector's ETF and I could invest in that ETF, and it will cover a big diverse portfolio of companies that make up the majority of wealth within that sector. So it was really important for me when understanding what was moving the markets and why is the finance sector and why is the real estate sector currently underperforming in the stock market over the last year. Well, the truth really is most financial services such as banks are struggling right now because of the global pandemic, because people are taking money and they're holding onto it as cash, as dead cash, because they're not sure what to do with their assets. On top of this, there are so many companies that will be liable to go bankrupt in the billions and some in the millions, and of course that leaves banks liable to pay those fees, which is going to cause a lot of fear, which is why banks are crashing. And again, people and investors are starting to take their money out, become investors, because it is now so cheap, and we can use platforms such as Trading 212, which is the platform again that I use for trading because they have zero fees associated when you are buying stocks and shares, and this never used to be the case many years ago. And with all of these apps and these trading platforms opening up, I invest in a bank when you're only going to be getting, for example, 0.5% per year in interest, versus putting your money into a stock where you could potentially see up to 10%, or in some cases up to 100% if you've done your research correctly after a market crash, and you can really start to see that long-term interest building up over the course of a few years. So obviously people are putting their money into trading platforms like myself, and we're investing in stocks and shares for the long term because we know that we can get a much greater percent of return on our account rather than just leaving it in a bank where I may see not even 0.5% of increase per year. Currently my portfolio is still up around 18% since the lows down in March, which is incredible. So again, this is the power of investing, which just goes to prove to you why banks are not doing so well. I cannot expect to see an 18% return in my bank, not even within my lifetime. Yet here I am 1 month or 2 months after a market crash, and I have already made 18% of my money back. So it is obviously why the banks are struggling right now. And again, a reason why real estate is because again, there is a lot of fear and uncertainty in the markets. Who is going to be buying and selling at this time? Because with jobs lost and so many global issues going on with flights and traveling, people are not going to be willing to spend their money. So people are not willing to move, people are not buying and selling. And so this is why we are seeing a decline potentially in these markets. But that does not mean to say that they will not pick up in the future. And again, while prices are cheap, you can actually get some really nice stocks and ETFs into your portfolio right now that do pay a very high dividend yield. And we do have some dividend aristocrat stocks that you can choose individually. So again, it depends where you're doing your research, where you want to invest your money. And as an investor, it's all about knowing what is going to move these companies to become profitable, especially after we've had such a decline recently because of the COVID pandemic. And again, if you look on the other end of the spectrum, you've got some positive results there with technology. We can see that the technology sector is booming right now, and it has gone up about 30% in the last year, which is a really amazing figure to look at, because when you're thinking 30% on your account, again, if you're investing £100,000 and you've invested the majority of your wealth into the technology sector, then you're going to be expecting to see a return of £30,000 in one single year. And another thing that's booming right now is that like button. So please do make sure to destroy that like button for me, because guys, it really does help out with the channel, and a lot of work went into this video for you guys. So hopefully you can learn something from all of the information here that I'm giving you today. Again, we are in a mix of pandemic, so a lot of these stocks are currently still performing under from some of their highs over the previous few years. So we are not going to see the greatest results looking at some of these results over the last 12 months. But again, these are long-term thoughts for you to think of as an investor. and for you to do some more research into the certain sections that you're going to invest in. So guys, I do hope you have found the information in this video useful today, and I hope you have learned something new. If you are someone that is looking to invest and you want to get started, I recommend opening up an account with the trading platform of 212. I will leave a link below in the description, so do make sure to copy that affiliate link. You will get a free stock up to £100, and so will I if you do use that affiliate link. They are associated with the FSCS, so your money is protected up to £85,000, and they have a zero fee commission, so you will not pay a penny if you are buying and selling stocks or shares on their platform, which is why I use them. They are great for new investors. I hope you have a wonderful week. I hope to see you back on my channel soon, where I will release some more videos on some of the exciting picks I am holding in my portfolio, so hopefully you can add them to your portfolio as well. I'll see you soon. Take care and enjoy the rest of your day.